Been a bit of a tricky start to the week. How about yourself?
Oh, it's been crazy. It
has been quite manic, hasn't it? You've been quite a hard guy to get hold of this week, haven't you?
Honestly, this week alone, we had like 5 move-ins this week alone.
Wow. So did the second day of the week.
It really is, honestly, after saying about before. Jeez. You know, like January, February, March or April slowed down a bit of the rental market. Now it's just boom, just gone crazy.
Wow, amazing. We're bringing to you on Salaam Radio every Tuesdays at 5 p.m. our show, The Peterborough Property Guys. We are live on Salaam Radio on 106.2 FM. You can listen to us online by visiting salaamradio.co.uk or watch the show on our streaming services by searching Salaam Radio on Facebook, YouTube, Instagram or Twitter. If you prefer mobile, please download the Salaam Radio app through the App Store or Google Play. Salaam Radio is always on air 24/7, 365, uniting all communities. You can watch the repeat of this show if you missed the live show by simply following us online. Today's guest for this week is Danny Church and Gareth Walker from Walker & Wheeler Mortgage Solutions based over in Fletton. Danny and Gareth will be sharing with us their years of expertise, why it's more difficult than ever to get a mortgage. So if you have any questions, then please get involved in our show by dialing 01733 602 133, or you can text or WhatsApp on 077 45 278 978. So guys, before we actually proceed with the show, I've had quite a auspicious week. In fact, I really want to dedicate today's show to the people of this community, and the reason why I want to dedicate the show to the people of my community, or this community in fact, is because this week I've been honoured to win an award from the British Property Awards as a gold winner, and I just want to say thank you to my community to support me. I really want to just dedicate this message to them, so thank you ever so much everyone for supporting me in my success. So our main topic to be discussed today is how Peterborough first time buyers need 7.2 times their annual salary to get on the housing ladder. It's always been a topic frequently discussed, so how mortgages are difficult to obtain, so hopefully we'll shed some light on that. But more interestingly, we got Danny and Gareth here, who are going to be they're experts in the industry, so they're going to be shining some light on that hopefully at a later stage. Every week we normally talk about how the Property Guy is an amazing platform for people to listen to. Adam, remind everyone again what the Peterborough Property Guys has to offer to the people of Peterborough.
Well guys, just as you see here, or you're listening, if you're on live on the live stream, you see we've got local industry experts on here to shed some light on how it's actually working, how the property industry is actually functioning as we speak, rather than just hearsay and what happened years ago. It's all relevant, it's all current topics, it's hearing it from the horse's mouth. So if you guys are looking at a mortgage right now, like I say, we've got Danny and Gareth right here. Who better to ask, what better opportunity to ask the industry experts right in front of you, any burning questions you've got. Along with last week, we had James from Wilson & Co. He was shedding some light on how the property market's getting on with sales and lettings, residential. And of course, you've got myself from lettings and yourself from sales, Kaz. So
absolutely.
You miss me that much, guys? You want to play me again on your phone as well, eh?
Sorry, mate. Trying to stream it live on my Facebook page, but never mind. Hey ho, being men, we can't multitask, so
it's true.
But guys, before we go into the full details of the main topic of the day, here's the headlines for today's. Claims that the property market is heating up like the British summer. What is it to be British? Our stubbornness, our vexation at injustice, our obsession with football and rugby. We are weather obsessed, external, awkward, non-committal, modest people who are underneath seething like a volcano because someone jumped the queue. But ultimately, our number one obsession is a property ladder. So, more on that with my main man Adam. So, you're with the Property Guys, bringing you the latest stories about the Peterborough property market. So, if you're listening live on Salaam Radio, we've got a question for our audience and our listeners out there. So, if you're listening right now, the whole purpose of this is for you guys to really engage. Today's question is quite a important question, in fact. Are rent increases the reason why homeless numbers in Peterborough have risen by 56%? As we all know, over the years, the homeless have increased. We've all seen it. And recently, last week, in fact, on Peterborough Today, there was an article about how it's increased by 56%. So that's a huge number. So guys, if you're listening, then get involved. We'd love to hear your thoughts on this matter, as it's quite a depressing matter. We are dealing with this in this day and age. You can WhatsApp your answers on 07745 278 or get involved on Facebook. Adam, before we discuss the main topic, what is your thoughts on this matter?
It's a really interesting one, isn't it? Because I know I've seen from stats before that Peterborough, that we were one of the biggest homeless population in the country. And it does make you wonder why, doesn't it? I mean, an interesting thing I've seen quite a lot, and we've been in the sort of investor community with people dealing with properties, is quite an interesting concept of taking these older properties, the sort of more basic ones, a little bit run down, and actually give them to the council on leases for the homeless to use them. And I mean, I think that's the perfect solution as well. You've got so many of these old run down properties in Peterborough which, you know, landlords either can't or won't spend their money on. And, you know, we've got a massive good cause to give it to. And the landlords get guaranteed rent as well. So I think there's a lot of solutions we can offer with it. But I do think you're right. I think going back to the main cause, it probably is a little bit of people being priced out of the market and a lack of financial education as well.
Okay. It's quite interesting. So I'm just going to read you a bit about the article last week. Sarah Ferguson, Assistant Director Housing, Communities and Youth, said, "We were expecting something in the region of 1,500 to 1,700 homeless persons present themselves to the Council for help and support in 2018 and 19, which would have been an increase of 38% on the previous year. However, due to a number of factors, that figure rose to 2,355 presentations of homeless persons seeking help, an increase of 56%. So this is the interesting part. There are many reasons for the increase: a huge rise in Section 21 notices being issued by landlords on their tenants, the loss of a job, and the breakdown of family. So what could be done to reduce homelessness?
Again, it's coming down to price, isn't it? I mean, I always wonder when people rent properties and even when they buy, are they taking on too much more than they can chew?
Right.
You know, are they getting right at the top of their budget and then sort of scraping by every month? So it's like you said about the family breakdown. Obviously, in this day and age, we don't stay together as couples or family units as much as we used to anymore. And as we're seeing from the stats we're going to go through later on the first-time buyers, if it's really only affordable as a couple, if we're non-committable and we're breaking up all the time,
Sure.
then one person can't sustain a whole household on their own normally, especially in the rental sector, because generally it's the lower income population that are renting.
It's interesting you say that. There must be many factors, in fact, why this is an issue. One being rent increases, one being Section 21. Could there potentially be other reasons? Like, one of the things mentioned, in fact, in the article was, when people get released from prison, they don't have an actual home to go to. So what does the government do about that?
It's really interesting, actually, isn't it? It kind of goes back to the same thing I was saying about earlier about leasing properties at the council and stuff like that, because there's obviously a demand for it, isn't there? Obviously is, because you're totally right. Thinking about when they do come out, like, where do they go? With no direction, no home. The natural thing is they are probably going to go back to the same lifestyle they lived in before.
Exactly. Well, it's quite an interesting topic, that is. So once again, if you want to get involved, you can WhatsApp your answer or a suggestion on 07745 278 978, or you can call the studio on 01733 602 133. So Adam, is it true our number one obsession is with the Peterborough words are not coming out correctly today. Is it true our number one obsession is with the property ladder?
I'd say it is definitely in Peterborough. We're in an area with, I think some parts of Peterborough are saturated with up to 80% private rented sector in certain parts of Peterborough, and so we must be property obsessed. I mean, I don't know about everyone else out there, but I certainly am. I'm sure you are as well.
Correct. Yeah.
But it's that thing of owning our own home, isn't it? As a nation, we're taught we should own our own home. It's almost frowned upon when you're in a circle of your peers if you rent a home rather than own it, which is quite an interesting subject. I mean, because I know as an investor, we actually look at it the other way around nowadays. We actually look at it as your home, although it is an asset because it obviously you get capital appreciation, that money and sat in the property equity could almost be better used on investments, and the cash flow will then pay you rent somewhere else and still have money on top. So it's a funny way to look at these things, because it's all the peer pressure. It's society, isn't it? It's society looking and frowning down upon the renters, when in fact most people would be better off renting, well, in certain situations when it comes to building a portfolio, than they would be owning.
quite interesting. I mean, roll the clock back 100 years, and in 1918, just under a quarter of all Brits owned their own home, and 77% rented. So go back 50 years, and in 1968, only 46% of people owned their own home, and the rest rented. Would you say this home ownership thing is quite a new phenomenon?
Well, I mean, according to Denton House research, anyone looking to get a foot onto the property ladder as a first-time buyer in Peterborough today, I mean, as a single person, would need to spend 7 times their earnings on a Peterborough first-time buy property.
Wow, that's a lot.
That is a huge amount, isn't it? Especially considering, I mean, I'll go again, the mortgage guys will answer this for us in a sec, but
yeah.
I mean, I know the average mortgage is 4 to 5 times your annual salary.
Mm.
So, I mean, you literally can't get a mortgage at that rate.
It's very difficult, isn't it?
It is. I mean, using the numbers from the Office of National Statistics, the average value of first-time buyer property in Peterborough today is 130,000 compared to 115,500 just back in 2007.
Okay.
I mean, if we divide those property values by the average earnings of the first-time buyers in 2007, that was £17,047 per annum, and that's now risen to £18,080 per annum, giving us a ratio of 7.2 to 1.
Interesting.
But I mean, however, what must be remembered is that these are all statistics from the Office of National Statistics, and don't take into account other factors. Like, most people buy their first home as a couple. I mean, also mortgage rates are their lowest rate. They've all-time low. They've been in years and years. I mean, I can't remember because I wasn't doing property back then. But in the 90s,
yeah,
I know
ridiculous, weren't they?
It was crazy, like 15% plus in some places, and people literally handing the keys back to banks rather than getting repossessed. So it means borrowing today is relatively cheap. I mean, it looks like it's only going to go up from here because we are at a low, but at the minute it's still cheap. And with the different mortgage products like a 95% loan to value, meaning first-time buyers have only got to save 5%, along with all the other incentives like help to buy shared ownership. There's a lot of incentives to get on a ladder and trying to pull the first-time buyers up, but it's still tricky. I mean, we live in an age of instant gratification nowadays. No one wants to save anything, especially not first-time buyers.
Absolutely, yeah. I mean, you say that, but going back in the 90s, I mean, houses were really peanuts, weren't they, compared to now?
Oh, they were. Yeah, I mean, I've still got landlords who bought their house for £500 and get £700 a month rent.
Yeah, wow.
It's not a bad ROI, eh?
Yeah, it's not bad at all, is it? I mean, do you believe there's been a mindset to owning a home?
Oh, 100%. It really is. Because again, it's drilled into us. Like, you should own your own home. It's an asset. It'll appreciate, and it does.
Yeah.
It just depends what path you want to go in life. I reckon is, in my opinion, of what is the best route for you. I say, me as an investor, I would sooner have that money and put it into 2 properties and have an excess over my rent. I'm renting somewhere bigger and better.
Yeah. I mean, the main issue that first-time buyers have is saving up the deposit, because let's be honest, buying a house is a lot cheaper than renting.
Definitely is. You're right. The mortgages generally are so much cheaper, so much cheaper. But I mean, we've kind of changed our model a little bit over here. We've kind of gone to more the sort of European model of home ownership.
Okay.
So now people tend to rent sort of early to midlife, and it seems like they're waiting for the money to come from inheritance, and then they're buying later on in their life. So they're buying sort of 40s and 50s. Interesting. But then obviously the cycle continues, because obviously you're moulded by your parents and your elders above you, aren't you? And if your mum and dad bought at 40, 50 years old, and you grew up and rented, you're actually going to almost certainly do the same. Quite an interesting topic that is, in fact. So guys, once again, if you do want to get involved in the show, our initial question to you guys was, are rent increases the reason why homeless numbers in Peterborough have risen by 56%? So once again, if you want to answer, you can WhatsApp on 07745 278 978. You can either call the studio on 01733 602 133, or we're on Facebook Live. You can always send a message and we'll respond. So we're going to now move on to our guest, who are from
Wheeler and Walker.
So Gareth and Danny, thank you very much for coming to the studio today.
Thank you.
So you also announced yourself as D&G, is that right?
Yes, that's very much a new thing, born out of the last
more like it,
20 minutes, yes.
Fantastic. Well, guys, to start off with, would you like to just introduce yourselves?
Well, I'll fire away. Gareth Walker, co-director of Wheeler and Walker Mortgage Solutions. Thanks for having us, and congratulations on your Gold Award.
Thank you very much.
Clear indication of great work you're doing. So
thank you very much.
We were, as a company, born out of myself and my business partner working together for 5 or 6 years in a corporate agency environment, and putting our heads together and saying, well, let's go out there and help more people.
Okay.
By forming a partnership ourselves, and then we needed or wanted more numbers, and there was only one man we sort of wanted to go after for his knowledge and his skills, and he's sitting to my left.
Oh, brilliant, fantastic. Hey,
Gareth, I don't do mortgages, mate. You know that, don't you?
Adam didn't take up, so we took Dave.
Who's next?
Excellent. Well, Gareth, would you like to introduce yourself briefly about your background?
Yeah, certainly. I'm Danny. Obviously, worked for Wheeler and Walker Mortgage Solutions. Started with them in February. Previously worked at a corporate place for many years where we obviously met Gareth and things, and then decided to make the jump. Best move ever. So
fantastic.
Brilliant. It's all going well.
Brilliant.
Nice, guys. So I prepared a few questions earlier for you as well, because again, I'm sure the viewer's going to pitch in with a few as well. I mean, like I say, me as an investor, I don't deal with too many residential mortgages, so it'd be quite interesting to see how you guys are getting on your side of the fence. So, I mean, statistics come in, and I don't know how true these are, but statistics, because Zaffy gave me these, so, you know, I don't know. But
he's an award winner, don't question.
Exactly.
I know, so this is why I've got them written down, so I assume they're correct, but they're saying 25% of all purchases in Peterborough last year were purely cash. I mean, how are you finding this?
I was surprised by that when I first saw the stat, to be honest. I don't know, again, if that is down to a lack of awareness. Sometimes you find situations where certainly older people, so, you know, people in their 50s, 60s, 70s buying investment places, believing they have to invest the entire amount. And it's really just trying to give a platform to say, do you know what? People in their 60s, 70s, 80s can still get buy-to-let mortgages. So you're looking at a situation where rather than buying a place for 200,000 cash, you could put 60,000 down and buy free, and split your risk, and, you know, to a certain extent.
So, I mean, surely that's a much better strategy, is it not?
I think we've got to be careful not to say everyone should do that, because of course one size doesn't fit all. But you're right. If you're looking at you know, a return on your capital, arguably getting 3 lots of rent, 3 pays more than 1.
Oh, exactly.
Absolutely.
And it must spread the risk as well. If one doesn't pay, you got the other 2 paying. So, I mean, if you was a typical home buyer, and we're looking at these stats we read earlier, about 40, 50 years old, and you had a pot of money, and say I don't know, say 50, 60k, what would you be looking to do? What would you advise to do?
Is this on a residential basis?
On a residential, yeah, they're going to go buy their first home. They've just inherited some money off the parents, and like you say, because most people I know from experience just want to put the most amount down, clear the debt. Debt is bad, get it gone.
The more you put down, obviously, the better interest rate and things that you're going to get from the banks and things. So that'll, because obviously the older you get, the less time you can have your mortgage for.
Absolutely.
So you've got to bear that in mind as well.
Sure.
But even at someone 50 years old off them stats there, you can still have a 25-year mortgage term reasonably easy these days. When that's the majority of banks and things. So
yeah, it is.
And you've also got other sort of schemes you can jump on the back of. You've got the Help to Buy scheme. You've got the shared ownership schemes and things. It's all out there. Key worker schemes. So there's lots of things out there that can help people.
I mean, if you are going to go for a mortgage, the next question has to be whether you should fix the rate or go for a variable. So
the $1 million question.
I think a lot of it comes down to personal circumstance.
Okay.
And that's why we're always saying, you know, let's sit down and review everyone's circumstances
so give
separately.
us some examples.
An example of someone we saw last week where they're a relatively young couple making a big step up in the housing ladder, so a 2-bedroom terrace to a 4-bedroom detached. Do you know what? For them, they wanted to go with a 5-year fixed rate because they thought it's a big extension on their commitment. They don't want to face a situation where the question is, could you afford to pay the mortgage if rates dropped? Of course you could. Could you afford to pay the mortgage if rates increased? Maybe not. So some people like the idea of locking in for that 5 years because of other political elements going on at the moment and the uncertainty that provides. People like the idea of the security of knowing.
Absolutely.
Because if you do rent, maybe Adam, you'll be able to help me out on this, but the general expectation is that your rent will go up every year.
Generally, yeah. I mean, it never seems to go down anymore, does it? So, yeah, you're always expecting it to go up a little bit.
So comparing the two, we'd often say, well, look, if you could fix your rental payments for 5 years, you would do, wouldn't you? And that comes across into the fixed rate.
It's a good way to put it, really, isn't it? Yeah. So, I mean, guys, what's the biggest challenges the mortgage industry is facing at the minute, then?
Should we take one each?
Yeah, go on,
I think one of them probably comes back to something you were saying, Adam, earlier, which was really interesting, which was around kind of a cultural thing where we have to have everything now.
Absolutely.
So in the larger part, if you've got a young couple, a lot of the time they've both got a car loan. So because you want the new car on the driveway, they've both got a car loan. So in terms of affordability, they may well say, well, look, we're paying £1,000 in rent, we can definitely afford £1,000 mortgage. Yes, you can, but the lender's interpretation is you've also got to pay for each of your car loans. So I'd say part of the
equally
bigger...
liable.
Yes,
basically.
absolutely. So part of the struggle is around the affordability element, where you're looking at trying to prove to a lender that yes, you can maintain both the mortgage payments and the other commitments.
It's funny you say it, because we actually touched base on that last week, didn't we? Because about obviously before one of the massive things in the crash before was they were lending on the basis of your earnings, not what you were left with after all your expenses.
There's been a big change in that, and a lot of it is now down to disposable income. And lenders now stress test. So I don't think they do like a stress test. They're saying, rather than assessing your mortgage on the rate you're paying, let's assess it on a much higher notional rate, assuming that mortgage rates will go up. So you're absolutely right. You'll find that affordability can be a little stretched now.
Yeah, it definitely seems like a much more sensible approach in that way, eh? Because I've seen people, especially when I'm dealing with renters, I've got some people who earn 50 grand and they've got 51 going out. It's like, on paper it looks like you earn a lot of money, but if it's all going out before you get a chance to spend it.
There are massive variances though from one lender to another, and I think again, without wishing to sort of self-promote, that's where sitting with a broker helps.
Absolutely.
Because we've seen many people that have been to see their bank and they've said, "Oh, I know I can only get X amount," and you're saying, "Well, actually, we've got lenders available that will get you a lot more than that." So it's definitely worth sitting down with someone, because what's good for your next door neighbour might not be best for you.
Oh no, 100%. I mean, as an investor, I've got massive experience of that. I mean, for example, one of my business partners, she wanted to remortgage her residential. Funny enough, because she wanted to upsize in London, but she also wanted to pull a bit of cash out. And the one mortgage broker, independent as well, but obviously didn't have access to all the products the other one had. They literally said that she couldn't pull any money out, and that her payments would go up. So yeah, not a good move. Went to another one, and he got 20 grand out, plus the payments dropped by £200 a month. And nothing changed. It was in the same week. Yeah, it's just to show you must shop around. You must have access to that market.
I think another interesting golden nugget, in fact, could be if house values increase, does that affect your mortgage rate or your mortgage outgoing?
It will be if you've got, depends on the size of your deposit, and that's where obviously if people are renting at the moment, like you said, the renting market's obviously prices increase as well. Yep. So if you've got first time buyer, well, someone who's never owned a property, or anyone who's never owned a property, if they're in rentals, they find it harder to save money for the deposit, because they're going to need normally minimum sort of 5%, unless they're doing, I don't know, one of these schemes with Barclays, for example, Springboard, where your family's then got to guarantee 10% of the property value, etc. So it's...
How was that? I've not actually heard of that one.
No, they do it. There's a couple of lenders actually do it.
Oh, really?
So you won't actually need a deposit yourself. Your parents or a family member, they can actually gift 10% of the... It goes into the bank account.
Okay.
And they normally can get that back after 3 years it is with some of them. So it just helps you on the property ladder really without having a deposit yourself, and at least the parents can get the money back.
I mean, that's a lender-based solution to get around
the
the second biggest problem I feel, which is deposit.
That's it.
I'm guessing the banks the lenders are anticipating the prices to go up. Then otherwise they wouldn't be offering that.
It's been around for a while. I think it's just obviously everyone's heard the bank of mum and dad and things they call it. So it's just it's a way. As long as you're paying the mortgage, obviously, that they can actually get access to that money in 3 years' time and things if they want it back and things. So
it's quite an interesting solution, eh?
Yeah.
Do you reckon if more first-time buyers knew about this, then there'd be more first-time buyers on the property ladder?
Possibly, because to be fair, I think it's quite sort of common knowledge sometimes, or some people know about it.
Yeah, I think it's quite common. What we are seeing so much more of in relation to deposit is the bank of mum and dad, the bank of auntie and uncle, the bank of nan and granddad. They're the only banks that seem to be growing these days.
They offer the best rates, you say.
Yeah, exactly. Yeah. But they're coming into it a lot more, and really sort of helping people out to bridge that gap. You were talking about 7 times income.
Yeah, 7.2. Yeah.
It just don't.
It's tough to get that. Let's be fair.
It is. Yeah.
So there's often the case of saying, well, you can get to this point. For those that are viewing, you can get here. But to bridge the gap, we're going to need additional deposit. Is there anyone in the family that would help out? And that's where they're making bridge the gap at the moment.
it's really interesting. So if you're listening, there's loads of golden nuggets being dashed out by Danny and Gareth now, you know. So if you've got any questions, because in our lifetime we all need to eventually buy a house. We've got so many questions going through our minds. If you've got a question that you want to ask Danny or Gareth, by all means please WhatsApp us, give us a call on the studio on 01733 602 133. We are now going to go for a short break for a few minutes, so don't go away, join us back, and we'll see you after the break. Thank you very much. Bye for now.
Stay tuned to Salaam Radio after this short ad break.
मेरा नाम मुकद्दस है और कोर्ट मेरा घर है और ये मेरे लिए किसी जन्नत से कम नहीं। हमारे भी कुछ ख्वाब हैं जिनकी ताबीर को हमें पाना है।
आइए इन बच्चों के ताबनाक मुस्तकबिल के लिए अपना हिस्सा डालिए। अपनी ज़कात, सदकात, खैरात और इमदाद कोर्ट को दीजिए।
UK number 0300 123 7774. Website court.org.uk.
Peterborough just got a whole lot tastier. Five Lads Flame Grilled Peri Peri Chicken is now open. Bring your family and friends to Peterborough's first HMC meat-selling restaurant. We are experts in grilled chicken, lamb chops and gourmet lamb and beef burgers. Our healthy options include fresh salads and fresh grilled vegetables. Fresh, clean and healthy grilled food with 4 different flavours. Lemon and herb, medium, hot and extra hot. 5-star hygiene rating. Eat in, order and collect or order for delivery on Deliveroo. Follow 5 Lads Peterborough on Facebook and Instagram 5 Lads. 15 Cowgate, Peterborough, PE1 1LZ. Call 01733 56 22 87. Open 7 days a week, 12 to 11 p.m.
Almarad Tiles. With over 70 stores nationwide, we are now open in Peterborough. Up to 50% discount offers now on. Largest selection of tiles. Full bathroom suites from only £189. Paint, LED lighting, laminate flooring from only £7.99. Over 1,000 designs of wallpaper in stock. We have everything you need. Come and visit us at 193 Fengate, Peterborough, PE1 5BH, or call us on 01733 34 58 47. Almarad Tiles, now open.
Had a car accident or an accident at work? Accident specialists are experts in no-win, no-fee accident claims. Leave the hassle to us. Our multilingual settlement experts will manage the entire claims process on your behalf, with nothing to pay up front. We provide services such as credit hire, taxi vehicles, recovery, storage and much more. For full details on our range of services and a free consultation, call us on 01733 555 774 or visit our office at 249 Lincoln Road opposite the NatWest Bank. Accident specialists. Start your successful claim today.
Insure 24/7 is a community-based insurance brokerage offering competitive premiums and a great service. Taxis, properties and businesses, we cover them all. Call us on 01733 856699 or visit our new office at 304 Lincoln Road. Insure 24/7. We've got you covered. Insure 24/7 is authorised and regulated by the Financial Conduct Authority.
On the authority of Ibn Abbas, may Allah be pleased with him, who said, "The Messenger of Allah, may the peace and blessings of Allah be upon him, said, He who does not show kindness to the young and respect to the elder is not one of us."
हज़रत इब्न अब्बास रज़ियल्लाहु ताला अन्हु से रवायत है कि नबी अकरम सल्लल्लाहु अलैहि वसल्लम का इरशाद ग्रामी है, जो छोटों से शफकत से पेश नहीं आता और बुजुर्गों की इज्जत नहीं करता, वो हम में से नहीं है।
You're listening to Peterborough's community radio, Salaam Radio, 106.2 FM.
Half a time.
Welcome back to Salaam Radio 106.2 FM. You are listening to the Peterborough Property Guys with myself, Kazafi Sadiq, and my co-host Adam Cooper. Welcome back, Adam.
Hi, Kazafi.
So before the break, we asked a series of questions to our special guests today, Gareth and Danny from Wheeler and Walker Mortgage Solutions. So guys, before the break we were speaking about how a first time buyer needs 7.2 times their annual salary to get on the property ladder. Now, Gareth and Danny are going to be explaining to us what other great options first time buyers have to get on the property ladder. So if you're a first time buyer, or if you're thinking about getting on the property ladder, then this might be important for you. So Gareth, if you don't mind sharing with us, what is Help to Buy?
Well, should we let Danny take it?
Yeah, I'll do it.
Okay,
yeah.
And you want to go on the shared ownership?
I'll do shares.
Perfect. Yeah. So Danny,
Help
fire away.
to Buy scheme. It's exclusively for new build properties at the moment. So obviously you need to get in touch with any new build sites that's there. Go around, have a little look. In a nutshell, all you need minimum 5% deposit. The government, they'll put in 20% deposit. It's an it's an interest-free loan for 5 years. You won't have to start paying any money on that until obviously in 5 years' time.
Oh, brilliant.
But in the meantime, if you could remortgage in 2 years into the deal and then pay some more of it off if you've had pay rise and things, etc., so you might end up never having to pay any interest on it at all, possibly. So the only caveat is, though, if your property goes up, that's where the government will make the money.
Yep.
You're then paying about 20% of whatever your house is worth at that given time. But it's a great. It's not just for first-time buyers either. It's for anyone else. The only caveat is you're only allowed to own the one property. So
sure, but it's a really good opportunity to get on the ladder,
Yep.
to have your own home, to feel independent, and to have your own property.
Certainly is.
But Danny, what happens if that goes the other way? Because we haven't seen that yet, have we, since it's been introduced? Because we only had...
Well, obviously I'll probably have one to do shortly, because the house they bought, it's on the lender's website, it doesn't look like it's worth the amount they paid for it. But again, it's still only 20% of what your house is worth. So it can work in your favour. So if you're remortgaging, you probably want your house to come down.
Yeah.
Possibly. Maybe not in the long run, but so it's 20% of whatever your house is worth whenever you get that survey done.
Brilliant. Awesome. Okay.
So in terms of repaying back that loan, though, because funny enough, I actually looked at the Help to Buy scheme when I bought, and in the back of my mind was, what if in 5 years' time the prices have dropped and I owe 40 grand on a loan, which I've now got to try and service along with the mortgage debt?
You've got that. That is the option you've got. But hopefully during that time, in the first sort of 2 years, majority of people I know who've done it, they've actually tried to pay it off as soon as they can, or they would then just sell their house if it was coming too much, sell it off, and then when the proceeds from the sale, you'll get rid of the Help to Buy equity loan. So, and that's it really.
Okay.
But then it is only 20. So if your house has dropped significantly, you will only pay them back 20% of whatever your house is worth.
Okay.
So hopefully your mortgage balance is not over that.
Yeah.
No, it's interesting because I asked, because when I actually visit new build sites, I had the missus, she loves anything shiny, so we end up all the new build sites as you do, and all of a sudden they were trying to take me around 4-bed detached houses with a garage for like 245 grand. They're like, but you've only got to put down this because you can afford it now because they Help to Buy. And I was, well, I'm sure I probably could,
but do I want to?
But what's my exit? And they went, well, it rents for 895. I went, well, at the time it probably wouldn't have, but it's great if it does. But what if I actually want to sell the asset or refinance the asset or just move?
Yeah.
And it was so, I felt like I almost got led astray to the shiny penny, which of course you wanted. Everyone wants a big 4-bed detached to their first house. But in the back, knowing what I know, I thought, how would I exit the deal?
Well, to exit will be to get rid of the Help to Buy. You've basically got to buy it out really. So 2 ways: you either remortgage if you can, or if you've got a nice rich mum and dad or someone in the family win the lottery, then as long as you get rid of that 20%, so that's all you've got to do, basically get rid of it, which obviously I know it's probably a little bit more difficult if you're not earning loads and loads of money, so you might end up being saddled with it. But again, in the way the loan actually works, so in 5 years' time, if you haven't paid any of it off and you start paying interest on it, you're always going to be, it's like 1.75% of the actual loan amount. So currently at the moment you're looking, it's about, depending on the house price, you could be looking maybe an extra £80 per month or 90, depending on the price of your property. But then that's going to go up with the RPI retail price index each year.
Yeah.
So if that goes up, then obviously your mortgage payments your interest is going to go up as well. So
it's interesting it's only that small amount though, because again, this was never explained to me as a first time buyer at the time. No one ever sat down with it, actually said like, Adam, this is the worst case scenarios, they'll go up and you can't pay off the loan by that point, this is what you're likely to pay.
Yeah.
I think I myself personally probably would have been more inclined because, again, it eases that element of risk.
Yeah.
And I wonder how many first-time buyers actually realise that.
Probably not. Well, whenever I do an application for them anyway, I'll always run a lot of lenders' calculators. They'll factor in a specific rate anyway, so it'll be able to give you a rough idea of what you're expecting to pay.
Yeah.
So,
yeah.
In 5 years' time, assuming that everything's the same interest rates and things, obviously. So.
Brilliant. Okay, so over to Gareth now in terms of shared ownership. So what's this shared ownership about, and how can it benefit first-time buyers?
Well, Peterborough's a really great place for shared ownership because you've got the likes of Cross Key Homes based here. They've got a lot of shared ownership, both new build and second-hand stock, if you like. Accent, Nina, I know as well, do it around here.
Okay.
One of the main benefits of shared ownership is the amount of money you'll initially need as deposit. So carrying on from what we were talking about earlier on, the deposit amount is reduced relative to the share you buy. So as an example, if it was a £200,000 open market value and you bought 50%, then your share is 100,000. You then only need 5% of your share.
Okay.
So the total amount of savings you're going to need is 5,000 as opposed to 10 on the full ownership. Yeah. You'll pay rent monthly to the housing association themselves, but again, that rent is regulated, so it can't spiral out of control.
Okay.
And each shared ownership property is subject to affordability stress tests, if you like, supported by the Homes and Communities Agency. So again, they're not going to put people into something they can't afford. You've then got the option, of course, there are more and more lenders when you come to remortgage a shared ownership place.
Okay.
So you still have the finance options.
Okay.
You can do what they call staircasing in most cases. And what that involves is if you bought a 50% share at the start, for example, when you reassess your options 2 years later, you might buy another 25% back. So you increase the share you've got, and as you increase your share, the rent drops. Because, of course, you're no longer renting 50%, you're now renting
that's really interesting.
25%.
In terms of, I mean, it's great to get onto the property ladder as a first-time buyer, but what if in the near future that first-time buyer was in a better buying position and they wanted to buy the other share? What position are they in to actually buy that other share?
You can staircase pretty much at any point, so long as it's financially viable.
Okay.
So if you're in a situation maybe where you were, let's say, a trainee vet, there's a random job title, but you knew that 12 months later your salary would double. You could buy into it initially on the basis that you know in 12 months' time your salary guaranteed income is going to rocket. You buy at that stage. But again, with property prices, you buy out at the value at the time. Yeah. So again, because we've got to look at if house prices go up, you pay proportionally. If house prices go down, again you pay proportionally. So you'd actually theoretically save some money by staircasing.
Brilliant.
So now, Gareth, when it comes to stamp duty on this one, because again, I actually looked at shared ownership myself when I bought. It was interesting because obviously, like you say, if you got a £200,000 house, but then you're only buying 50% share, and it suddenly becomes a £100,000 house, technically to you on a mortgage. I noticed that you could almost, from what I've gathered, was defer the stamp duty until you staircased up.
You're absolutely right. You can defer it. Which again, in terms of those challenges, it's the upfront cost a lot of the time. You've got solicitors to pay, you've got surveys to pay, you've got a fine deposit. Being able to defer that stamp duty makes a big difference to a lot of people.
Awesome. Guys, if you want to get involved, if you've got any questions for Gareth and Danny, by all means you can text and WhatsApp on 07745 278 978, or you can call the studio on 01733 602 133. We're live on Facebook Live. You can comment or ask any question on our online services. Gareth and Danny are a local mortgage advising company based over in Fletton. So, Adam?
So guys, I think the topic of all investors I know anyway, and probably I don't know about residential side of things, so I don't deal with it too much, but on my mind and the people I speak with, is down valuations at the minute. How you guys find it? I mean, it seems like everyone I speak to is experiencing the same issue, and it's not just in Peterborough; it's nationwide.
Yeah. I've had a couple of down values myself recently, and something I think it's dependent on lender as well. I find one lender seems to be a little bit harsher than others. Because I did a application and it was meant to be at 180. The neighbouring one sold for 180 a couple of months ago, before that one, so it was brilliant comparable, but the lender still only valued at 150. But stick it to a different lender, they valued at 180. So it's
strange, isn't it? Do you think
certainly
is it a surveyor or is it the lender, do you reckon?
I think surveyors are by nature a cautious bunch. You often see statements come out from RICS to say, what they expect property prices to be doing and that kind of thing. So, and they, of course, they are the eyes of the lender, aren't they? So I suppose they're probably acting on instruction from the lender. But generally speaking, if you were to sit in a room of 5 people and said who's the most cautious, he'd be the one that's a surveyor for a living.
100%.
No offence to any surveyors watching, listening, or indeed catching up on anything else. No.
It's funny because I actually had one of my clients' properties. It got sold because they were coming to 72. It was a HMO as well, so he'd had his fair share by that point, and because he's going to get called in a couple of years' time anyway, so he's going to sell it. And that was a 5-bed HMO, so income producing asset, and that resi on that same house type sort of sell for 180, 185 all day long, and this got down valued to 160. When I was just as shocked as they were, the owner was, even the buyer was shocked. So I mean, it does show how cautious these lenders and these surveyors are being to down value something that was clearly an income producing asset at 20k less than a residential, which would need at least 20 grand to spend to convert it anyway.
Yeah, that's surprising.
That is surprising, isn't it?
Yeah, because imagine the rental yield on that would have been actually pretty decent, I imagine.
I think it's around about 12% yield, if I remember correctly on that one.
So quite good.
Pardon?
It's quite good.
It's pretty good, yeah. It's pretty good, and I was amazed because, like you say, others are sold in that area every day at 180. Even one sold on the same street with old aluminium windows, needed gutting inside. It's on the market for 170, so probably got between 160 and 170.
This isn't a one-man crusade against surveyors either, by the way.
No.
But
we love them.
You're sometimes in the position as well, if you do appeal a down valuation. So we're talking about where you comfortably feel the amount you were paying was fair, but it is down valued. What you're asking a surveyor to do is basically confirm they were wrong by amending their valuation and changing it back to what you thought in the first place.
Right.
And that's sometimes challenging because you're then asked to provide comparable evidence of what's sold rather than what's for sale, because that's kind of how but again, as Adam was saying, he's got prime examples of stuff that was sold, just didn't want to mark it up in that one.
No.
Just want to let you guys know we've actually had some comments from Samantha Weed. I'm not sure if you guys know who that is. Well done, guys, is what she said.
Mention me more, is that what she's saying?
I thought it was just you two.
Thank you, Sam.
So I'm saying, talk about how she's worked in Peterborough for 14 years.
Yeah.
Yes.
So she's saying she's sorry she can't be with us, guys. So it's okay, Sam. We got 2 for the price of 1. So you kind of made up for it. So thank you ever so much.
We're strictly the warm-up act, and the main event can arrive in a couple of weeks' time, maybe, if you have us back.
Exactly.
Absolutely, why not?
No, why not?
It's always interesting to see how our mortgages are getting on, because at the end of the day, this is a finance game. Without the finance, no one's buying.
Exactly.
You found that when the market, contracted back 07, 08, I suppose. That's the real driver behind the prices falling was the availability of mortgage funding. It wasn't lack of stock. There'll never be, or lack of demand. There'll never be a lack of demand in the UK, Peterborough especially.
Definitely
it's just
not.
lack of funding.
Interesting. I know we picked up on this topic before regarding 25% of all properties, Peterborough properties were bought without a mortgage in the last 7 years. For most Peterborough people, a mortgage is the only way to buy a property. However, for some, especially Peterborough homeowners who have paid off their mortgage, or Peterborough buy-to-let landlords, many have the choice to pay exclusively with cash. So the question is, should you use all your cash, or could a mortgage be a more suitable option?
One thing I thought of on that was, I suppose it depends if some of the properties aren't mortgageable. There's no allowance within the statistics. None of us can say that, can we?
No, true, yeah.
To sort of say, well, if it isn't mortgageable, Danny, for example, what wouldn't make it mortgageable? So kitchens,
multiple, or if it's, say it was set up as a HMO, it's been ruined. Some mortgage lenders won't touch it.
Construction of the property sometimes, depending if it was an old sort of concrete type building, it might not be possible to lend against. I suppose it's not wishing to judge statistics. I'm certain they're correct, but there's probably a little bit behind that. That's kind of one thing. But I think in an investment sense, I just kind of like the idea that if you split your money, you split your risk, and you've potentially got 3 revenue streams if you buy 3 houses rather than 1.
So true, because then you've got the capital appreciation as well of all 3, haven't you?
Yeah, you do.
That's the way I always see it. Was you're spreading your risk. Like you say, you've got 3 income streams to pay for the one liability, which is your own personal mortgage.
I think some people's fear may be, we've seen some people in older in life thinking, well, I want to invest my money into something, and I'll go into property and I'll buy one so it can be safe. But what if it doesn't rent out? Well, let's be honest, everything will rent for a price, won't it?
Mm-hmm.
Yeah, especially in this day and age.
Yes. And with mortgage rates where they are, £100,000 borrowing will cost you roughly £250, £300 a month. So if you're buying a £200,000 house and taking a £100,000 loan, yes, it is only interest only, but your outgoing is £250, £300. Your income, I would switch to Adam and say, what sort of income would I get on a 200 grand?
Cool. It depends. Are we talking a HMO single let?
Single let.
Single let on an average 200 grand house, you're probably looking at 250 on average cash flow, aren't you? So you're probably going to get rent of around about 800, 900 in this area.
So you're on an outgoing of 300 and an income of 900. If you split your cash, theoretically, you've got an outgoing of 900, but you've got 2-4 coming in.
That's what I mean. Yeah, you're killing it really, and that really, in my eyes, that's why I invest. I mean, it's all about multiple streams of income. And if you lost your job tomorrow, most landlords can sit there knowing and comfortably, they won't be as flush as they were before, but they got the different income streams coming in. But that's why I do shared houses personally.
Yeah.
Because it's almost like that same strategy, but in one house. One room's empty, I've got another 5.
I think one thing I was told is that if you're concerned about house prices and you're investing, don't put your whole money into one specific area. But working up here now as we do, Peterborough is vast. I'm telling you, you're listening millions. I'm telling them what they know. But to kind of split your risk, surely you would then just go to different parts of Peterborough to kind of try and cover yourself, if that makes sense. So you may buy one in the north, one in the south, one in the east. So if one area does come down, you're still kind of guarded in the other two. Would that make sense, Adam?
Yeah, it would. I mean, it's almost like and I know what I'm looking to do later on is build up the retirement fund almost. So like you say, it's like I would like to buy in London or somewhere similar with sort of capital appreciation, but have the cash flow from somewhere like Peterborough. So you got every sort of aspect of it covered, really, haven't you? You got London with its booming prices and its massive crashes when it happens. You got the cash flow of Peterborough, and you're just diversifying. Yeah. So I guess I just spread mine on a larger scale. But you're so right, because certain areas of Peterborough, just fly, and other areas just die a death sometimes. And I'm noticing stuff like Fletton and Woodstone areas is going crazy at the minute for rentals. Absolutely crazy. Anything I get over there just rents. And the city centre recently, for me, just sort of quieting down quite a lot. And it goes to show, there's some landlords who just mainly have P1 stock, city centre stock, who must be feeling the squeeze a little bit now.
Would you think the reason for that is purely because what's happening in the Fletton area at the moment, with the Fletton Keys?
Potentially,
Hampton.
It could be all the investment they're pushing into it. Like I say, you got the Fletton Keys, you got the potential urban beach was like £120 million development. You got the potential university was backing onto there as well. You got Lakeside at Hampton keep going as well. I think they've got like another 7 years worth of building there.
Wheeler and Walker headquarters, Fletton.
Exactly. I mean that alone, man. I just had tenants flocking to me the minute they heard.
Exactly. Yeah.
They said they were moving by just to get a mortgage when they needed to.
There's a lot of investment though from what you just listed there again.
Yeah, in Peterborough.
Oh, it's huge.
Well, everywhere. Because I'm not from here, not from here, but I drive into it and it's like it just went crazy everywhere.
Yeah, I mean, going a few years back, it was the fastest growing city in the UK. Then it went to number 3, number 4, and God knows where it is now. It was actually dubbed the worst city to live in.
Is it?
This was our first topic, in fact, wasn't it? Our question to our listeners. Social media went mental that day, didn't it?
It did, yeah. We got dubbed the worst city.
Quite shocking that was, guys. In fact, it brings us nicely to the kind of. We've still got 10 minutes before we finish, but kind of brings a end to the show because there's a lot to cover in terms of living in Peterborough. What's your guys' feel of Peterborough generally? I mean, this was an article going a couple of months back in the ET saying that Peterborough is the worst place to live in the UK.
I don't see why not.
We had a company meal out, didn't we, the other day?
Yeah.
So we went to Hampton, and the guys we were out sort of having the meal with there were saying, 10 years ago that Hampton was just kind of, they've got lakes and that kind of thing. What a great place. The shopping, my wife makes me bring her here to do the shopping, so we're coming 40 miles up the road to go to John Lewis and that sort of stuff. And,
nice,
you go home a lot poorer than you arrive, but I think it's got so many things for so many different people, and I think probably those views of Peterborough as one of the worst places to live are probably made by people that don't live in Peterborough.
Do you reckon?
Yeah,
I would say so. Yeah.
I think they just picked the most miserable people in Peterborough. I mean, it must have been raining. It's probably a Monday as well.
you got an indoor shopping centre. You don't need to worry about it.
This is it. But
you've got train links into King's Cross, right? Yeah. So the LNER, I think, what was it, 45 minutes?
Yeah, absolutely. 45 minutes direct. Yeah.
Roger Media headquarters.
And people will know. I know they built some new development up on Fort Road, didn't they? Probably 2-3 years ago now.
Yeah.
But people were selling their 2-bedroom flats in the centre of London and buying a 5-bedroom detached for the same money. And you're 45 minutes into London down the track. You go across London, it takes you longer than that. So I think go Peterborough. They can shut up.
Do you know there was something on the news about that? There's loads of people leaving London. It's like one of the biggest exoduses since I don't know, the 1800s or something like that. They were saying. So
wow.
I think it's probably the rise of remote working nowadays.
Yeah, probably.
There is technology nowadays. You don't need to commute to a single place of work anymore as much. So I was actually having this conversation earlier, funny enough. Why would you spend that money in London when, like you say, you can move just down even just on the outskirts? You can come to lovely sunny old Peterborough and catch a train 45 minutes in anyway. Cause I know when I go to London, God, I'm always baffled by how long it takes me to get across the city. I've got 3 stops doing that day. I spent half my day travelling. It took me 45 minutes to get from Peterborough to there in the first place. And it's crazy, absolutely crazy.
So, if you don't mind me asking, how long have you been in Peterborough?
Who, me?
Yes.
Since February when I started, but you have been here since.
Yeah, so my region used to cover from Stevenage to Peterborough.
Oh, okay.
Yeah.
So, but Sam, who's listening at home, so she's lived here all her life.
Oh, okay.
She's working in the city for 14 years. I used to have 3 branches in Peterborough and had those for 5-6 years, so kind of get to know the area. And because we do home visits, we find ourselves jotting out to all different parts of Peterborough that we've never been to before, thinking, and that's where I got the impression this place is vast, and the opportunity to invest or purchase is huge.
Awesome.
Oh God, people are always taken back by how big Peterborough is.
Yeah,
it really is. And when I first became an estate agent, I remember seeing how big it was. I was gobsmacked. Like, you think it's just a city centre, don't you? It's not. It's so much bigger.
It's a lot more to it than the city centre. Guys, what would you say you love about Peterborough? Because Peterborough is a city that I've lived here all my life. Adam's lived here.
Yeah, all my life.
Which is
it's 15 minutes down the road.
Do you know what, for me, number one would be the people.
Okay.
The people. I've met very few people in Peterborough that I don't like. I've obviously gone into business with a Peterborough resident, so she's all right.
So you got to say that, yeah? Is that what you're saying?
But again, family of great people, the people we used to work with in Peterborough, great people. There's some really, really good estate agents in Peterborough who are also great people as well. So for me, it would be the people without question.
Fantastic. Well, there you go, guys. If you're listening, a tip from Gareth from Wheeler and Walker.
Great people.
Great people, absolutely.
I think you've got a great city, if I'm honest. Come out, you've got everything close by, everything you need. You don't need to go anywhere else, really. Why do you need to go into London?
Oh, exactly. Well, if you want to buy a house, Danny, because Zaffy sells.
Exactly.
Gareth can sort the mortgage.
And I'll rent it out for
and Gareth will get you another investment and you can come to me.
There we go, we're sorted. No, it's no, I think it's nice. Like, there's loads of things.
We also do bad credit mortgages, so
there we go.
Because again, adverse credit is a point. So,
That's got to be the wages, surely.
That's it, yeah.
But no, it's interesting, Peterborough. We say about the investment in Peterborough. I just housed a bunch of contractors the other day, literally yesterday, and they were here refurbing the John Lewis in Queensgate, and they said straight after that they've got a contract to build a cinema in Queensgate that they've been going on about for
my
years.
wife will be pleased.
Yeah. So now Gareth can get dropped off at the cinema while his wife spends all the money, watch a movie and feel good, and then come out and go home.
Brilliant. Fantastic, guys. Well, it's been really, really exciting for you guys to be here. I'm sure the guys listening have benefited immensely from your golden nuggets. Is there anything else, Adam, that you want to add?
Really, I want to give Gareth and Danny opportunity to tell people where they can contact them.
Brilliant, guys. Fire away.
So we have the website, of course, www.wheelerwalker.co.uk. We are based primarily in Fitzjohn Estate Agents over at Hampton, but we also have associations with Edward Stewart and Peter Lane, two, again, really good local independent agents. We're available for office appointments, home visits, just looking to help the great people of Peterborough.
Fantastic. It's quite different home visits, isn't it? I've never heard of mortgage advisors doing home visits.
I know, it's a new approach.
Is that new to me, or is that something new that's actually come up?
Again, probably back to Adam's point with remote working, it comes back to the fact that a lot of people now, we can gather a lot of information over the phones. If you're a busy guy, we'll pop in for 45 minutes. We can meet in Costas. We can meet around your house. It's as a service, you've got to accommodate what your client wants. And I think commanding people to come into city centres a little bit. With the parking things, yeah.
Guys, just want to say thank you ever so much for coming to the show today. I really appreciate your time.
Thanks for your time.
Hopefully it's benefited our listeners. Guys, if there is any topics that you would like us to discuss about the property market, then you can WhatsApp on 07745 278 for next week. Our guest for next week would be a mystery guest, so we're not going to reveal that until a day before. So thank you ever so much for tuning in to the Peterborough Property Guys. You can re-watch this show on Facebook and YouTube, or visiting my blog www.peterboroughpropertyblog.com. From myself and Adam, thank you for joining us today on Salaam Radio. Until next week, same time, same place, with the Peterborough Property Guys.
Stay tuned to Salaam Radio after this.